Hey future millionaires, welcome to another ETF review. Today's ETF review will focus on 4 ETFs from the Wisdom Tree group. For each ETF, we're going to look at things like the ETF category, fund benchmark, fund summary, expense recap, top holdings, and then the performance. This performance is going to tell us what it would look like if you invest in this 4 ETFs consistently over a 5 and 10 year span of time. Before we jump into the review, please take a moment to like, subscribe, and share. Also, sit back, relax, and enjoy another ETF review from the Next Chapter team. Now let's jump into this Wisdom Tree review. First up, we're going to take a quick look at what an ETF is, exchange traded fund, and how to buy them. But first, let's take a quick look at which ETFs we're going to look at today. We're going to look at a large cap dividend, and mid cap dividend, and then finally straight up small cap, and then finally, this is our sector play. This is going to be India earnings. So we're going to go straight international on that one. So it's only in companies within India, or where the corporate headquarters is within India. Now jumping into is what is an exchange traded fund or an ETF? Well, basically it's a group or basket of investments, usually stocks or bonds, that trade on the stock market. But different from mutual funds, ETF share prices change all day. ETFs also tend to have low expense ratios and fewer brokerage commission fees, which makes them a great alternative to investing over the long term. Now, when you're buying an ETF, first off, it's a quick 4-step process. First, determine the type of account you're going to buy it in, either an IRA or a brokerage account. Why I list those and not a 401k? Because usually ETFs are not available in 401ks. That depends on your employer's administration that they're working with. Now, next up, you determine which investment broker you're going to work with. I'll give you a quick list just to spur some ideas, but really do your own research. So this is really who holds your account, but you get to control it. Then you decide, number 3, the frequency and how frequently you're going to make purchases of your shares in the ETF. We usually recommend try to go for your paycheck cycle. If you're weekly, go weekly. If you're 1st and 15th, go 1st and 15th. But we understand everyone's budget's different. So weekly, bi-weekly, monthly, whatever it may be. Just try to keep it consistent. And then finally, number 4, most important, set up to be automatic and automatic purchase. Automatic transfer in and automatic purchase. How you do that, step number 4, will depend on the firm that you work with. Call their help desk if you cannot figure it out on your own. They are usually very nice people. If you just explain your question and be patient, they will help you. Here's a quick down of some investment firms: Fidelity, Webull, M1 Finance, Charles Schwab, E-Trade, TIAA Craft, and even Vanguard. Again, do your own research. It doesn't take that long. Just figure out the one that you're most comfortable with, give them a call, and you can set up the account, or you could do it online. This has become very easy. Overall, the process, as long as you have the right documentation in front of you, will take 15, maybe even 25 minutes on the long end. But if you're doing the long end, you're probably setting up everything. That means the direct deposits, connecting you to your bank accounts, etc. But it's worth it over the long haul because you want to make this automatic over time. Let's get jumping into the good stuff. What are we going to look at for each ETF? First off, we're going to look at the ETF category, fund benchmark, fund summary, expense recap, top holdings, and finally fund performance. Our first fund is a DLN. This is a large cap dividend. This one is a ETF category, a large value. What is this one seeking to do? It's seeking to have investments that are dividend paying large cap companies in the US. So expense ratio for this one is 0.28. So that means for every $10,000, it'd be $28 per year to hold on to this fund. All right, in this one, you get 306 different companies. Top companies include Microsoft, Apple, JP Morgan Chase, Exxon, Broadcom, NVIDIA, Johnson & Johnson, Procter & Gamble, and Home Depot. Now let's take a look at that sector breakdown. You've got sectors like information technology at 20.39, financials at 16.85, consumer staples at 12.89, healthcare at 12.83. Finally, from there, everything else is under 10%. But that first part brought you well over 50%, really close to 60% in fact. You have sectors like industrials, energy, consumer discretionary, communication services, real estate, and finally utilities. Let's take a look at that performance. The 1 year in this one is 17.08, 3 year 9.616, 5 year 11.24, 10 year 10.31. And since inception, so that means if you bought this when it first started, it would have been 8.96. Next up, we have DON. This one is your mid-cap dividend fund. ETF category, mid-cap value. And what are we doing here in the fund summary? These are investing in dividend-paying mid-cap companies in the US. Expense ratio 0.38. So that means for every $10,000, it'd be roughly $38 to hold on to this fund. Now, I never really say this, but it's important to point out the $38, that's taken out within your account as a cost against the fund's performance. So it's not like you're cutting a check per year for that $38. Now jumping into it, how many companies do you have here? 332. Companies like Vista Corp, Cambridge Financial, International Paper, Packaging Corp of America, Veritas Energy, INC, Citicorp Financial, and WP Carey. All right, now what sectors do you have? Financials start the list with 24.61. Industrials next up 16.46, and then consumer discretionary at 11.70. And between those, you are almost at 50%. From there, everything else is under 10%, and you have sectors like materials, real estate, utilities, energy, consumer staples, information technology. That's really low at 3.73 compared to some of the other ones, obviously. And then communication services at 2.29. Next up, we're going to take a look at that performance. All right, checking out that performance. That 1 year is at 14.12, 3 year 6.48, 5 year 8.12, 10 year 8.37, and since inception, so that means you bought this bad boy right when the fund first started, 8.90. Next up, we have this Wisdom Tree Small Cap Fund that goes by EES. And this one is tracking against Wisdom Tree's custom US Small Cap Index. That means they've developed their own index that they're tracking against. This expense ratio for this one is 0.38, which means for every $10,000, it's $38 per year for this fund. All right, well, this is the winner of the day. So far, this has got 895 different sectors in here, so different companies. All right, so companies like Cal-Maine Foods, TPG Inc., Bread Financial Holdings, Levi Strauss, BGC Group Inc., Nordstrom, Axios Financial, Victory Capital Holdings, and Par Pacific Holdings Inc. And again, those weights are super low. Look at those percentages. Everything's under 1%. And that makes sense because you have 895 different holdings. It's going to be really spread out. But that's why we put this on the side and look at this and say, well, what sectors are you in? Right now, check it out. At the top of the list for your sectors, you've got financials at 25.90. Consumer discretionaries at 16.70. Industrials at 16.75. Information technology at 10.35. After that, again, in this case, boom, you have close to a little over 60% right here at those top four. Everything else is well under 10%. You've got healthcare, energy, consumer staples, materials, communication services, and then finally real estate. Not bad. Quite the spread for this fund. All right, the 1 year performance on this one is 6.84, 3 year 0.10, 5 year 7.27, and 10 year 7.01. And since inception, 7.61. All right, our final fund of the day is this Wisdom Tree India Earnings. This one is a ETF category of India. So basically, it's your international play here. This is seeking against the Wisdom Tree India Index. So this is their custom index. This one has an expense ratio of 0.87. So that means for every $10,000, it'd be $87 to hold on to this fund per year. This one goes by EPI, and there's a total of 477 different holdings here. And what companies are included here? Reliance Industrials, HDFC Bank Limited, ICICI Banking Ltd, Infosys Ltd, Cola India, Oil and Natural Gas Corp, State Bank of India, Tata Consulting Services, and Power Grid Corp of India. So let's take a look at those sectors. All right, your sectors. Topping the list is financials at 22.39. Next up, energy at 17.33. Materials at 13.56. And then finally, information technology at 10.34. After that, everything else is under 10%. But that makes sense because between those top four, you have well over 50%. So you have in sectors like industrials, consumer discretionaries, utilities, healthcare, consumer staples, and communication services. Now let's get to the good stuff. What is that performance? Your 1 year, 39.61, 3-year, 15.35, 5-year, 15.34, and 10-year, 9.51. Next up, we're going to put these ETFs in action. We're going to take a look at what it would look like if you invest in all 4 funds consistently over a 5 and 10-year span of time. All right, now let's take it to the spreadsheets. And for today's example, we're going to have someone investing consistently $9,500 per year, so $9,500 per year, and 4 of the funds we just reviewed. So again, our first up is a large cap dividend, 1 year of 17.08, 5-year 11.24, 10-year of 10.31. Next up, we would have had the mid cap dividend, and we would have had a 1 year of 14.12, 5-year 8.12, 10-year of 8.37. Next up, our small cap. This is a small cap straight up fund, and this is 6.84 for the 1 year, 5-year 7.21, 10-year of 7.01. And finally, our exotic or sectic play this time is an international, and our international is 1 year is 39.61, 5-year 15.34, and 10-year of 9.51. Okay, as a reminder, since we're big on this channel to do long-term investing, we don't look at that 1 year. 1 year is not enough. 3 years not enough as well. We focused on the 5-year. Let's check out that 5-year. So our 5-year, we would have invested $47,500 or 73% of the balance. Then we would have had growth of about $17,457, bringing our total balance up to $64,000, $64,957, so roughly $65,000. Not bad for the 5-year. Now let's check out, let's see if we can get nice close to a 50-50 or even higher on the balance between investment and returns. And all right, check it out. We have a total balance of $156,000 roughly, $155,946. So we'll just call it 156. All right, invested cash would have been $95,000. So $9,500 per year consistently for 10 years. And then from there, you would have growth of $60,946. So the balance, again, breakdown would have been investment 61%, total growth on that 39%, bringing you to a total balance of $155,964. Hope you enjoyed the review. Hope you found this helpful. Hope this inspires you to do your own research to invest consistently, but most of all, to get yourself in a position to do these things yourself to really build some long-term wealth. See you in the next video. Please drop a comment, like, subscribe, and share. Talk to you soon.
Hey, thanks for staying to the end. This video is brought to you by the Next Chapter team. If you enjoyed the video, please take a moment to hit that like button, drop a comment, subscribe, share with your friends and family. This will help the channel reach out to more individuals just like you. We offer one-on-one coaching where we work with people and small businesses to determine a clear path to achieving their financial goals. This includes things like budgeting to reduce debts, planning for big purchases, and even learning how to build wealth with the tools that you have readily available to you. So please see our link below to schedule a free 30-minute call with our team to talk through coaching and understanding your current financial situation. Also, check out some of our affiliate links below for high yield savings account. This is a great place to put your money when you're saving up for those big purchases and your emergency fund. Check out some of our videos right here, and please enjoy and see you in the next video.